Welcome back, ladies and gentlemen. Thank you for keeping tuned. This is Smart 24, where we drive your business. My name is Anthony Sebali. Now, to our top stories right away. Bank of Uganda has actually seen an increase in the central bank rate of Uganda. So we have seen, due to rising inflation forces, Bank of Uganda has actually been pressurized to increase its central bank rate, and Bank of Uganda still says it will continue to increase the central bank rate until when it is certain that all the threats to the economy have been contained. Now, to control the rapidly increasing inflation, the Bank of Uganda yesterday but one, raised the central bank rate by a percentage, that is 1%, from 6.5% to 7.5%. The rate has been 6.5% since June 2021, after the central bank seemed to have kept inflation below 5% target. It is, of course, the target that the central bank always set. That is a target of maximum inflation 5%. The rate, of course, according to the Monetary Policy Committee statement yesterday, Bank of Uganda said that while the inflationary pressure are likely to be temporary, the worsening economic outlook, uncertainty and risks ahead have motivated a revision of the central bank rate to contain the demand pressures and increasing demand versus subdued supply. Bank of Uganda also indicated that it will continue to raise the central bank rate until inflation is finally fully contained. Inflation has rapidly increased as a result of increase in commodity prices, rising to 6.3% in May from the 2.7% that is at the beginning of the year in January. While addressing a press briefing in Kampala yesterday but one, the Bank of Uganda Deputy Governor Mr. Michael Ating Ego said price of essential commodities such as cooking oil, soap, food, fuel and transportation had risen sharply, creating a supply versus demand imbalance right there, occasioned by, of course, COVID-19 and the Russia-Ukrainian war. The weakening of the shillings against the dollar, coupled with rising food and energy prices, have worsened the inflation outlook since April. High business costs are likely to spread to consumer prices, thereby pushing the inflation higher in the coming months. That is according to Mr. Atingi Michael Ego, who is the Deputy Governor of Bank of Uganda. Consequently, Dr. Atingi Ego said annual headline is now forecast to average to 7%, which is higher than earlier projections. Bank of Uganda has projected inflation to peak in the second quarter of 2023 before gradually declining with the 5% target by mid-2024. However, Dr. Michael Atingi Ego, the Deputy Governor, Bank of Uganda, warned that the outlook remains significantly uncertain, with the balance of risks tilted upside down. The main upside risk, he said, includes the global inflationary pressure amid persistently higher world food and energy prices, which are likely to filter through the further weakening of the shillings. Bank of Uganda also noted that the weaker domestic demands is likely to squeeze consumer incomes, which will constrain investments. Dr. Atingi Ego also indicated that optimism for economic recovery by COVID-19 outlook is projected in the range of 4.5 to 5% in 2022, which is lower than the previous projections of 5.5 to 6% as of April. The central bank said risks growth outlook, which are tilted downwards, include, of course, weaker global growth, escalation of geopolitical conflicts, heightened global economic uncertainty, and higher inflation. This, Dr. Atinji Ego said, has dampened consumer confidence, heightened exchange rates against especially the dollar, and of course the exchange rate volatility, and prolonged weak growth in private sector credit. However, he noted that in the medium term, the economy is expected to grow between 6% to 7%, supported by public and private investments in the oil sector. That is a story right there coming up from, of course, Bank of Uganda. As we all know, we are, of course, certain that banks around the world are increasing their rates, including the Federal Reserve, that is the Central Bank of the United States of America. They were one of the first people to actually increase their interest rate, and that the effect of that flashed throughout the entire world, as now many banks are rushing to see that they increase their interest rates in response to the rising commodity prices around the world. And of course, Kenya, of course, last week was one of the first countries to actually declare an increase in its, interest rate from 7% to 7.5%, according to Mr. Njoroge, who is the governor of the Central Bank of Kenya. So we are seeing this as a response to inflation, but probably you want to hear the address of the president today at 2 p.m. to know what the country is taking as its next step in terms of, controlling or even putting to bay the rising commodity prices. So at 2 p.m., the president will be addressing the nation on issues concerning economics, policies, security, and all the other issues pertaining the nation in the State of the Nation address. And we hope to hear some of these in his address, of course, as people are on their, they have been pushed to the edge of their spending culture with a very limited saving, with very high prices of the commodities they used to buy, probably at much more convenient prices before. So the central bank, coupled with government, of course, should devise means and see that we have a steady drop in prices. Otherwise, the situation may not be as good. But as we say here in financial markets, you always have something to put aside so that you can save something, but above all, invest that saving so it can make you a little bit more money to secure your future, so that you have something to lie back on in future. In another story, we are seeing that in the last 5 years, 3 high-profile cases, including Ham versus Diamond Trust Bank, and of course, Simba Manyo versus Equity, and Simba Properties versus Vantage Capital, which is the most recent conflict, have challenged the legality of foreclosures by lenders that are not registered in Uganda. Now, Bank of Uganda Director for Research, Mr. Adam Mugume, has said that the increasing rate of default on foreign source loans increases Uganda's risk profile. In notes shared with this publication in response to inquiries or an increase in the court cases challenging the legality of foreclosures by foreign lenders and their implication, Dr. Mugume Adam, the Director of Research at Bank of Uganda, said because Uganda operates in a global economy, any default in terms of servicing a foreign loan is not only harmful to the business, but to the entire economy of the nation. It, of course, as he said, raises risk premium to lending to Uganda. Fulfilling contractual obligations by businesses goes a long way in reducing risk premium and therefore reduces the cost of credit from abroad, he said, noting that beyond impacting foreign lending default, also impacts foreigners' partnerships and of course foreign direct investment and offshore investment. Uganda, according to Dr. Mugume, currently attracts an annual average of about 1.2 billion US dollars worth of foreign direct investment, while close to 800 billion shillings and 2.7 trillion is held as deposits in banks and government securities offshore investors by offshore investors respectively. The revelation comes at a time when a number of businesses are challenging, of course, the legality of foreign-based lenders, including banks and venture capital funds, and of course some of which, after trying to foreclose on properties against which defaulted loans were advanced, have been declared non-existent, while others have been found not to have powers to execute foreclosures because they are not registered according to the Ugandan laws. In the last 5 years, 3 high-profile cases, including Ham and others versus Diamond Trust Bank, including also Sibamanyo versus Equity Bank, and of course Simba Properties versus Vantage Capital, which is the most recent, have challenged the legality of the foreclosures enforced by lenders and that are not registered in Uganda. In the case of Ham versus Diamond Trust Bank, which has since been appealed, court found that Diamond Trust Bank had no legal standing to enforce a foreclosure since it was not registered in Uganda. While in Sibamanyo versus Equity Kenya, there has been several applications, many of which have since been overtaken by events with properties, of course, against which loans had been advanced already disposed of. Last month alone, a miscellaneous application filed by Vantage Capital barred the South African lender from enforcing a share takeover in Simba Properties. Vantage had lodged the applications on claims that efforts to enforce the share takeover had been frustrated by the Uganda Registration Services Bureau, that is the URSB. In a legal opinion, court found URSB had acted illegally in refusing to register the application. Such cases have created mixed reactions, with some experts condemning their outcomes, given that they are making it difficult or even expensive for Ugandans to access capital from foreign lenders. Dr. Tumu Boine, that is Tuinemanzi, the Bank of Uganda Executive Director in charge of supervision, in an interview last week, told us that it was difficult for the central bank to estimate how much is held by businesses in foreign loans, noting that much of the loans of the money comes in as private equity. However, he said the rising business exposure had created the need for banks to reveal the central bank transactions that are repaying loans abroad. And as you have raised an important question, beginning June, we could be forced to request commercial banks to include in their data how much is going out in terms of loan payments. Generally, most borrowing is private equity, which sometimes even local banks don't get to know or understand. He said in response to how much Ugandan businesses are holding in foreign loans. That is a story as well right there from Bank of Uganda. We are seeing an increase in cases in terms of defaulters of credit. and of course the most recent Simba Properties versus venture capital. That is a venture capital known as, Vantage Capital. So we are seeing these lenders actually give money to companies here in Uganda, and of course the law doesn't provide for, in case the loan, the person who has borrowed the money fails to pay back. The law has not provided for what can be done. Can actually, these companies come and take over the properties of these companies that are borrowing? What could be done? So there is something missing there, and I think the government must respond positively to that one as well, so that we avoid such cases. Remember the Ham versus Diamond Trust Bank, still issues to do with credit, loans, and defaulting on the loan. So I think the government should intervene in terms of coming up with policies and laws that will be able to protect both the people borrowing money from foreign companies and of course the foreign companies as well, because they also deserve their, to play well in the market, because whenever we have so many defaulters on our loans, Uganda becomes, high risk profile. It goes into the high risk profile, and that affects directly our investments, our foreign investments in other countries, but also other countries' investments in Uganda. Because if we cannot handle our credit well, if we cannot handle our debtors well, then definitely we shall not have many, of course, interested in investing here. That is another story we will be keeping hands on to see that we get down to the bottom of exactly what happens. We are going to move across in Kenya. Traders in Kenya are feeling pain in their neck, of course, due to the dollar shortage. Now, the Central Bank of Kenya Governor Mr. Patrick Njoroge refutes claims of dollar shortage, saying there was rising demand for dollars 2 months ago, but the situation has normalized. Relentless depreciation of the Kenyan shilling, raising concern among importers and business people who are experiencing first-hand pain of a dollar shortage that has seen them part with over 120 Kenyan shillings per dollar against the quoted rate of 116 Kenyan shillings. Now, the Kenya Association of Treasurers in May, that is on May the 30th, expressed worries over the dollar shortage, claiming members who mainly rely on imported raw materials cannot access the dollars at the official market rates, that is between 115 and 117. Already, rising inflation has heightened the cost of living, and the depreciating currency is only exacerbating the pain as manufacturers complain of rising production costs due to the persistent dollar shortage. In the past year, the Kenyan shillings has fallen by over 0.0007 from about 0.0093 US dollars, 0.0086 US dollars, meaning that what Kenyans could buy at over $100 previously now costs at least $8 more without factoring in the inflation bit. During the same week, that is during the same period, other currencies in the region remained relatively stable, only decreasing by a small margin, even though most of the shocks that cased currency depreciation, such as the COVID-19 pandemic and the Ukraine crisis, are cutting across all the countries in East Africa. Now, Ugandan shillings, that is our very currency here, depreciated by about 0.0002. That is 0.402. And of course, that is something we should be proud of right there. Tanzanian shillings decreased by 0.000, of course, 1. While the Rwandan franc has fallen by about 0.003. That is exactly what's happening to the shillings right there. Now, Kenyan economist Mr. Kwame Owino told one of the newspapers in Kenya that the higher rate of the shillings could be due to internal policies and regulations constricting the interbank forex market. The little clarity in the price signals and of Kenya's interbank foreign exchange and growing negative trade balance are the greatest possible contributors to the high depreciation rate. Although Kenya's foreign currency reserve has remained well above the other countries and East Africa community's statutory requirements, the dollar shortage is a problem disconcerting, seeing that Malawi recently devalued its currency by about 25% to deal with a similar problem. Central Bank of Kenya Governor, that is Dr. Patrick Njoroge, has recently refuted claims that the dollar shortage, saying that although there was rising demand for dollars about 2 months ago, the situation has since then been, of course, normalized. That is another story we will be keeping on as we see the shilling dwindling away against the dollar. As you know, every time we are importing more than we export, of course, we buy the dollar because most countries they purchase things using the dollar because it's the strongest currency. So every time we trade our currency to buy the dollar, make the dollar scarce, and the moment the dollar is scarce, it increases in value. Our currencies back there do decrease in value. Every time we actually are trading more, we are importing more goods into our countries. So Kenya, what it is witnessing, of course, could be due to many other internal factors and external factors outside this, but mainly it's due to that currency depreciates. And of course, 0.007% decrease in value is not something small for a country like it has access to ports like Mombasa, and Tanga, I think, and other ports where they can import so many goods that are coming into East Africa. Whatsoever affects Kenya will definitely affect Uganda and DRC and other countries that are landlocked around Kenya. So yeah, we will also as well be waiting to hear from the president tonight later on at 2 p.m. to see what he has to say about the Ugandan shilling as well, which has as well not been doing good against the dollar. So we want to see if we can actually see our currency strengthen and remain resilient in these turbulent times. Remember, inflation is one of the problems, but influenced by many other external factors. The Russian-Ukrainian war, of course, COVID pandemic, and so many other factors that are contained around inflation. So we will be seeing how the government and how key players like banks and the central bank are stepping in to address the issue of the weakening shilling. We are going into a short break. We return with more stories. Remember, later on the program, we are having Mr. Kayemba Isaac, who is from SPG Securities, here to analyze the reports of British American Tobacco. We'll take this very short breather and we'll be right back. Don't go anywhere.